It's a pleasure being here. Wishing everyone a very happy Independence Day. We had an extremely interesting session with Mr. Shailendra Dubey to understand the transmission of wealth that you have acquired in your lifetime, and how with the processes and the tips and the tips to be followed in doing that. Today, now in my session, under the aegis of AMC and Finovate, I'm going to take you through the wealth creation, or the first box which he talked about, the entire wealth accumulation, but a part of it which relates to business finance, and typically what we earn from rendering our professional expertise. As doctors, you would either be practicing yourselves, or you may be operating clinics, nursing homes. You may be involved in a fixed capacity with some large hospitals rendering your specialized services. So no matter what is your process of wealth creation, the wealth accumulation part of it, insofar as it relates to our business finance, arising because of our professional expertise, how do we manage that? How do we maximize that? How do we make those critical decisions, financial decisions, which are so necessary every single day? That is what we're going to cover in today's session. I will take you through two separate parts of this journey in today's session. The first is more a little rhetorical, because I'm sure you're all facing or dealing with these aspects, but just for the sake of kind of bringing the entire discussion in perspective, I'm going to talk about the typical challenges, some of the financial decisions that pose a challenge, and why is it relevant to make these decisions in a certain set manner, right? This later part of the discussion for today, and that's the considerable portion of today's session, I'm going to take you through a aspect or a journey of how to deal effectively with these challenges, and certain tips that makes dealing with business finance decisions in a simplified manner, the way what I like to call made simple for me, for the medical entrepreneurs. Moving to the first part, you see, the relevance of financial decisions is something which is not lost on any of us. We are excellent in our professionals. As professionals, we are absolutely excellent in our field, whether we are specialists providing a specialist area of medicinal practice, whether we run clinics, whether we run nursing homes, whatever may be our field of expertise, we provide those services in a very professional and in a wonderful manner. But often what happens is that we tend to push away, and we push away financial decision making, or let our chartered accountant make those decisions. We say, we tend to kind of think that, oh, I don't know this subject. My CA tells me that this is more tax efficient, and so let me do a higher purchase of the equipment that is to be purchased, and I will not consider the other alternatives. So financial decision making is something that impacts our everyday activity, impacts our profession as much as your personal finance planning matters, or your post-life financial planning matters. The business financial planning ensures that whatever you earn is earned in the best possible manner, is earned with maximizing the profits, and is earned without having sustained losses. You see, nothing can continue with sustained losses. I mean, most issues, whether you have to sign a contract, whether you have to deal with paying your monthly expenses, salaries, maintenance contracts, AMCs, all the rest of it, or how do you price your services? These are all decisions which impact the longevity and the sustainability of your practice. If you continue to have a negative health and you go down that trajectory, you as doctors would be the first to point out that your longevity is going to be affected. You will die young. The same principle applies to business finance and your professional money as well. If you do not ensure that the longevity is created or good health is created in your financial matters, there will be a demise sooner than later. I will just take you through some simple examples of the kind of decisions which you are called to make every day in your business. You are required to make a lot of decisions. I mean, whether you hire additional staff, or you require, you need to cut down on your manpower at a certain point in time. What should be, when should you change the prices of services that you've offered? Everyone in your neighborhood has started to change. Should you change it at that time, or should you change it when your costs increase? When do you make those decisions? How do you make buy versus lease decisions? So there's a lot of cost benefit decisions that you need to be taking constantly. How do you make these decisions? That always poses a challenge. Pricing decisions are the next piece, which are a very big ticket item and need to be considered carefully. Why will you change your prices? When will you change your prices? Because all of these decisions continuously made in an inaccurate manner or not following the principles fully will lead to depletion of your wealth rather than creating more wealth. And we've seen that the last 18 months has posed such a big challenge and such an enormous pressure on the healthcare services and the entire medical fraternity. We can do with simplification of these decision making. Other kinds of decisions that impact you are what kind of a practice that you're practicing. And I will dwell on this a little more as we progress in this session today. What kind of a practice are you running? And therefore, what should your focus be? Should your focus be on reduction of costs or increasing your price? How do you make these choices? How do you delink? Why is it important, and how should you delink your personal finances from your business finances? That becomes singularly the most important and the messiest area that we all deal with. Most professionals, I mean, it is not just the medical fraternity, but most professionals deal with this aspect because the personal finances inevitably tend to get mixed up with business finances, and it is important to be very cautious and disciplined about this and delink the two at all times. I will dwell on the reasons for that when we move further in the presentation today. Most of you who run clinics or nursing homes or any other practice will be very conscious about the fact that come end of the month, there is a pressure on your cash requirement because all your monthly expenses have to be met. The rent has to be paid, salaries have to be paid, your supplies have to be replenished. A lot of outflows take place at the end of the month or at a certain fixed point in time during the month. Cash flow planning, how do you do that? Finding simple ways to do that is going to be far more helpful when you're making these decisions rather than doing it as a postmortem or trying to bridge gaps or waiting for your CA to give you this information, which may or may not come always in a timely manner. And last but not the least, what is your optimal legal framework? Should you operate as a sole proprietary practice? Should you have a partnership, LLP, a private limited company? What should be your model of carrying out your practice? So these are typically some of the questions which you need to constantly keep grappling with. You constantly need to keep dealing with. And how do you find the answers? Surely there must be something or some way that this can be done in as comprehensive a manner as possible. So that, before I move to the second part, I was just going to say that takes me to the second part. What I want you to kind of take away from today's session, and I'm hoping this is what you will take away, that you start building frameworks or a thought process which will help you make sound financial decisions. You can build your own model. I mean, while we do have models that we recommend, but you can build your own model as well for making financial decisions. How do you improve profitability? By focusing on all financial aspects, not just the relevant costs or the big ticket costs, but even seemingly irrelevant costs need to be captured when making financial decisions. Sometimes it is all the intangible costs. How does it affect your reputation by taking a particular step? If the reputation is going to be impacted, most of us will shy from making that decision, because it is our reputation that we put out there when attracting patients or customers to come and take treatment that we prescribe, right? So knowing all of these costs, knowing the benefits that you can take, how do you control these costs and improve your profitability is what I'm hoping you will all take away from today's session, and also some tips on selecting the appropriate legal structure for your practice. With that, I'm going to move on to the second part of today's session, where I will cover ways to effectively deal with these challenges and some tips on making business finance simpler for professionals like yourselves. In order to effectively deal with these challenges, what is important is, first of all, to build a mindset. It is a discipline. I mean, go back to the time when you were studying medicine. It required a certain rigor, it required a certain discipline to be followed, to say that this is, if we are studying a certain stream of medicine, it required entire focus on that part of the body, so that you're dealing with the issues and challenges that come up in that part of your body. Finance, similar to that, has a similar approach. It is a very rule-based approach. It is something where you need to have a discipline and you need to be comfortable in dealing with all of these aspects. So take the time to understand the financial dimensions of your practice. What does your practice entail? What kind of costs and outflows does your practice have? Examine each of those very clearly, very carefully. What is the model that you're operating? That becomes important, right? When you start looking at these costs, it's important then to understand whether these costs are fixed in nature or they're variable in nature. Fixed is something which happens with that regularity, time after time, say paying rent for your clinic. On the 31st of the month or the 1st of the month, you have to pay the rent no matter what happens. Right? Variable will be you incur that cost only if you have provided that service to somebody. It is something which is incurred only if the income is going to come into you. So adopt a stepwise approach when analyzing your costs. You need to then understand the relationship between the costs that have been incurred and the benefit that you're going to derive. I will dwell on this particular point in a later slide as well, as to how do you establish that relationship and what should you consider when looking at making a certain decision and creating that nexus. So you need to isolate that part of your body. You need to isolate that decision that has to be made and establish the direct and the indirect relationship that your costs have to the outcome that is expected, and all the outcomes that you can derive from that incurrence of that cost. Again, a critical aspect to be looked at is, when examining the costs, are they creating value-added activities for you? And if not, what are the ways to reduce those costs? Is it possible or is it not possible? Right? I spoke earlier, I'm going to emphasize again, it's very important to have a discipline to keep your personal finance and your professional finance absolutely distinct. And more so, what my friend Mr. Dubey spoke about, right? Your personal finances, you can definitely give away with your own free will as you desire. Your professional finance, if it's tied up in a partnership firm, if it is tied up in a private limited company, you have a limited flexibility in giving that out to your heirs. Right? But besides that reason of post life planning for that, even during your life, when creating your wealth, when you demarcate your personal and professional finances, you have complete clarity in what drives your practice. How do you control the pricing in your practice better? How do you control the costs in your practice much better and maximize and improve the profitability of your business, right? And wherever appropriate, have a far-sighted approach. I mean, that is typically what we recommend, because when you have a far-sighted approach, you don't get distracted by short-term losses that you might make. Because sometimes it is inevitable that you might make short-term losses before you turn the curve and start to make profits. I have this framework which I want you to imbibe and take away with you. Financial decision making depends on these 5 C's of financial, on these 5 C's. What are these 5 C's? The first is costs. I spoke about it at length when we were in the earlier section. The second C is the customer. You are there to serve as doctors to your patients, your customers, and it is what your customer can afford to pay. It is what your customer is willing to pay. It is what your customer desires to pay that will drive a lot of your financial decisions. Community plays a very big role. I was reading a report the other day, and India still is way behind in the growth potential or the number of clinics and nursing homes that are required. The medical fraternity is looking at a cumulative annual growth rate of almost 180% year on year for the next several years to come, because we have not saturated sufficiently. It is not always the big hospitals who can have that reach. It is going to be these smaller clinics, smaller nursing homes, medium-sized nursing homes, which cater to the community in a much better manner. So what is your optimal size? How do you work within that community requirements? That impacts your financial decisions. What is the competition around you doing? And what are the circumstances under which you're making these decisions? Sometimes a distress situation makes us take a different decision than when we are able to sustain for a longer period of time and survive during the COVID period. The circumstances were so different. No matter how expensive oxygen was, people were buying it at whatever price it was available. So it is circumstances which will determine a lot of your financial decisions as well. Take these 5 C's as the fundamental principles of financial decision making. Compare every decision against these 5 C's and see that you're meeting the criteria that you have set out for your practice. Now, before I move on, I'm sure a lot of you would be aware of these, the terminology which has been put up over here. But in order to holistically look at your business costs and knowing how to control those costs, understanding what is the optimal size for your practice that you need to have, understanding where do you break even, understanding the nature of practice that you're carrying out, right? It's important to understand some of this terminology which I have set out over here. I will go through a lot of these terminologies in the next few slides. What is the cost of your occupied beds? What is the cost of unoccupied beds? Are you conducting a cost leadership practice or a specialist leadership practice? All of us like to think, I mean, and we are all specialists in our own fields, right? But sometimes the nature of practice that we conduct may be better tuned to look at it from a cost leadership rather than a specialist leadership. And sometimes it's the other way around. So having that clarity is very important in knowing what it is that you can control and what it is that you should control in this. And what is the legal setup for your practice? Now, let's dwell a little bit more on understanding the costs. Many of you may be familiar, but just to kind of put the base and the foundation in perspective, your fixed costs, as you can see in the picture out here, is that straight line which generally will not increase over a foreseeable future, irrespective of the volume of activity that is carried out. So that will reduce per unit as the volume of activity increases. This is a relationship that I'm sharing with you, which is important to understand. Your fixed costs will reduce with the volume of activity that you carry out. Now, you can go back and look at all the costs that you are incurring and just kind of mark it only from your own curiosity perspective. I've put out one example over here that the rental for your clinic is more or less a fixed cost. Of course, if your volume increases dramatically, tremendously, you will need more space, so your rent will go up. But for the foreseeable future, you can take that to be a fixed cost. What else in your cost sheet are fixed costs? Identify that. Once you identify that, you create a baseline for the minimum volume that you must have in your practice in order to create better profits. Variable costs, that is the diagonal straight line which is going up, and with every activity that is, or every service that is offered, that line goes up in that same proportion, in a proportionate manner. So that is a cost that you cannot change substantially, and it will keep increasing with the increasing levels of activity that you carry out. What does that tell you? What is the relationship that you need to establish when you have these kind of, when you're dealing with variable costs? Inevitably, and your price of your services has to be more than your variable costs. Unless your price is set for your services, the price for your services is set higher than your variable costs, you will be making losses in your practice. Can you go back in your cost sheet and identify all those variable costs? I've given one example over here, which is your medical supplies. Right? It could be many other costs which are sitting out there, which are variable in nature. Right? And this has a linear relationship with the volume of activity. Then we deal with the semi-variable costs, which increase in a stepwise manner. So up to a certain point, they remain fixed. Beyond that, it's variable. For example, one nurse can possibly handle 10 patients. And if you have more than 10 patients, you're going to need proportionately more number of nurses in your clinic to deal with the level of activity. So can you identify those semi-variable costs, and what is the engagement relationship? I mean, to what extent are they fixed and to what extent they're variable? You don't need to do it in a scientific manner. Just a rule of thumb is sufficient. Now, when you understand these relationship of the different costs, the different types of costs that it has with the level of activity that you're carrying out, you are in a better position to know how you should be pricing your services, how you can improve your profitability. Where can you control these costs? Are there alternatives which can give you a better return than the incurrence of costs the way you are doing it today? Right. Moving on, right? Let me take you through an understanding of occupancy and non-occupancy of a facility. I spoke of beds earlier, but it could be of the facility in its entirety itself. Right? Costs are incurred. It's important to understand that costs are incurred irrespective of whether the facility that is offered is occupied or not. Right? So if that is a true statement, which it is, then your first step is to determine the cost of your idle or your unoccupied facility. How much does it cost you to maintain a bed in your clinic when it is not occupied? You still need to keep the place clean. You still need to have the sheets changed. You still need to have certain basic preparations ready at all times, so that when a patient comes in, the person can occupy that bed without having to you can't invent the wheel at that time. So there is a certain level of readiness which is expected when you're up running a clinic. Right? So what is that cost of your idle facility? And then you will have additional costs when this facility is occupied. So when you have someone come in, there is the entire treatment cost which comes in, the doctors, the specialist doctors' visits that come in, the routine doctors' regular checkups which take place, the nursing staff which is going to be busy around the patient that has come in. So there will be incremental costs which need to be added over and above this idle facility. Can you build that relationship, and can you establish what is the cost of your unoccupied facility and your occupied facility? This is what is going to be important to improve the profitability of your practice. Now, moving on, most of us, when starting our medical practices, when starting our professional journeys, right, we are called upon to make all kinds of decisions. It's not always that you will have all the money that you require to do the way you want to, start your practice. You might be called upon to take loans. You may have to buy very expensive and costly equipment. So the choice of whether should you lease that equipment, should you buy that equipment, can you do it in a collective manner? Maybe 4 or 5 of you get together and do a collective purchase, and everyone has access to that equipment. What kind of a decision would you be making under those circumstances? There is this constant need to have a cost-benefit analysis, even simpler decisions, more everyday decisions. You need to hire, your practice size has come down and you need to let go of some staff. When do you let go of your staff? You need to hire more staff. When do you hire more staff? Right? So on and so forth. So every decision needs to be analyzed. Some you may just do it without really giving it a second thought because it's everyday decision. It really doesn't matter. So the cost is immaterial as compared to the benefit, but it is still a cost-benefit decision. In this situation, what is important is you need to identify all costs relating to that decision. It is not costs at random. It is only all costs relating to that decision. And costs include tangible and intangible costs, right? So now if your decision is to buy a new equipment, right? In buying a new equipment, the clinic rent has no role to play. The cost of your clinic, the rent that you're paying for your clinic has no role whatsoever to play. But is the space in your clinic sufficient to keep the equipment? That certainly has a role to play, right? But I'm assuming you would have taken, you would have gone through those aspects, that the physical space is sufficient, but the cost of your clinic, the rental for your clinic has absolutely no role to play in that. What is it that has a role to play over here? The role to play over here is over what duration. If you're looking to buy it on an installment basis, over what duration are you looking to purchase that equipment? What is the outflow that you will have every month or every period, or over this entire duration? So maybe you have quarterly installments, monthly installments, whatever it might be. So what is the total outflow that you will have? Suppose you paid it upfront, what is your total outflow? Therefore, the delta, the interest which is going to be inside it. Will you have a sustaining practice over that duration that you're wanting to pay the installment? You need to make a judgment of that. Sitting today, you need to make a judgment over 3 years. You are going to have sufficient cash flows in order to meet that obligation, right? So all your tangible and intangible costs need to be put down systematically and understand that this is the overall impact on you, your money, and your practice, right? And in return, what is the benefit that you derive, right? You might have a more advanced treatment that you're able to offer because of this. You may have a need because the community in which you are living has a significant recurrence of this particular ailment, and therefore this equipment stands you apart. It builds your reputation. There are many tangible and intangible benefits. You might have the tangible benefits will be identified in terms of the increased volume of activity that you will have because of buying an equipment of this nature. The intangible will be the reputation that you gain. So all of these benefits will need to be identified, put down a value ascribed to each. Compare the two and make your decision. So that is, it is a very systematic, isolated approach that you need to have when making these cost-benefit analysis decisions. Moving on, I spoke earlier, when examining your costs, you need to look at all the costs which add value or which increase benefit to your customer or add functionality to your service or other values which get improved, and identify those costs which are not value adding. Sometimes they're necessary because it's a taxes that we have to pay, the licenses that we have to pay. It's regulatory in nature, and you don't have a choice over there. Sometimes it's the custom of the place of where you are practicing your specialization. So if you have, can you identify all the non-value adding costs and see how best to curtail those non-value adding costs in a manner that improves your profitability? Moving on, I'm going to take you through some understanding of pricing. Earlier on, I spoke of cost leadership and USP leadership. What do I mean by that? Now, a lot of times you may choose or you may decide that you're a specialist in a certain field, right? And that's a rare specialization. So you're an oncologist, you are a very specialized gynecologist or any other specialization where your years of experience have given you a certain reputation, right? And you might choose to say that there is nobody in the city of Mumbai who provides this as well as Dr. So-and-so. That is a USP leadership. You are going to start selling your time over there. And when you are selling your time, you need to make sure that where possible, can you charge it? For various reasons, you may not charge it at a premium, and that's completely understood. But what is the pricing that you can get because of this reputation, this USP, this specialization that you have, this leadership that you have, right? So it's important to understand what kind of a practice that you run. On the other hand, right, you may be running a nursing home in a neighborhood where possibly there are 10 more nursing homes as well. Here, of course, you can build a reputation, and that only if you need to get a treatment of this type, it is only at this nursing home that you can get it. But primarily over here, your profitability will improve when you keep your costs under control. Right? So it's a cost leadership in most of these situations. There is no universal law. Please understand that. I'm not prescribing a universal position. Everything is circumstance driven, and it completely depends on what the community, the competition, and the circumstances are. But by and large, that is how there is a behavior of costs versus price, right? Some of your pricing models would be cost plus. So in the second example, where you want to ensure that your clinic is profitable, your nursing home is profitable, you want to make sure that all your costs are recovered and you're earning a margin on that. So there is a cost plus approach that you would apply to it. But you may also be curtailed by what is the going rate price in the vicinity. If everyone else is charging only 2,000 rupees per bed per day, you will need to be very, very clear if you want to charge 3,000 as to what is the differential that you're offering to the patient and why they should pay that additional 1,000 rupees, right? So unless that clarity is there, you will continue to operate at the going rate pricing. Some of the other pricing models which you can consider is a penetration pricing, a skimming pricing. Bundle pricing is very popular amongst a lot of the medical fraternity, because you've come to consult your doctor for one particular matter. There will be follow on 3 other services which will be required. Pathological tests will be required. There will be some other tests which may be required, and so on and so forth. So you can do a bundle pricing in that situation, right? That if it is taken all together, you get this price. If not, you get this price, and so on and so forth. So you have different pricing models. You don't need to get lost with all these different pricing models. Pick up something which works well for you, and then start simplifying and analyzing your entire business finances in a manner that improves your profitability. Let me now move on to the last part of what I'm going to share with you today, which is the framework of the legal structure. Now, under Indian corporate setup, right, there are traditionally these 4 formats. Of course, you can have cooperative societies, you can have other collaborative establishments, but typically these are the 4 profit-making formats which are generally used: a private limited company, a LLP or a limited liability partnership, a standard partnership which is not limited liability in nature, and a sole proprietary practice. Very often, most professionals, medical professionals and other professionals, tend to practice as sole proprietary practices, because that's the easiest format to practice under. You don't need any other setup, you don't need any other establishment, the compliances are low, and so on and so forth. So it is the ease of practicing which should define your format. That's one criteria. But more than the ease of practicing, it's so many other factors which have a role to play. The ability to introduce additional areas of practice, bring in economies of scale, rationalize costs. What format can lend the best for all of these decisions is a format that you should choose. So today, you may be coming from a certain specialization, but there is an associated specialization and you want to bring in someone else to nurture that area as well, then a sole proprietary practice may no longer be appropriate. You might want to choose another format which meets those requirements much better. Then any format, whether a sole proprietary practice, LLP, private limited company, there is a cost of maintaining that structure. So what is the cost of maintenance? If, again, it's a cost benefit analysis decision. If the cost is greater than the benefit that you get, then you go to a simpler model, else you stay with that. Purpose fit, we spoke about that. What is your liability exposure? I mean, one is, of course, the medical liability that you would have as practicing doctors. But besides that, should you have, what more liability would you have? Would you be exposed to under which format? That is important to understand. And the most important is your time distribution. What is the time that you will spend towards administrative matters vis-a-vis towards your practice? That is very critical. That's an intangible aspect, but a very critical aspect that you need to consider. I'm going to leave you here with this framework, which helps you understand when should you consider a sole proprietary practice, when you should consider a partnership, when an LLP, and when a private company, right? So, I mean, it's here on the screen, which I'd like you all to absorb. If you, sole proprietary practice is the simplest format, but it has the least amount of flexibility. The growth in that is restricted to just you as the individual who's providing that practice or who's undertaking that practice. It cannot grow beyond you. But when you know that that's all, you just are going to sell your time, you are the specialist, people ask you for your specialization at all times, maybe that is the best model, because you're not going to you don't choose to partner with somebody else in that. You practice or you carry out your profession only with your own specialization. But if there is more than you, I mean, you're coming together and offering a kind of a bundle of specializations or a bundle of areas of medicine, then it might be better to consider a partnership or an LLP. These days, LLP is a preferred alternative because it reduces or restricts the liability that you're exposed to. LLP, being a separate legal entity, you can start to use it for promotional activities, which typically as medical professionals, we are restricted from doing. Even as chartered accountants, we are restricted from advertising or carrying out promotional activities. But as an LLP, you can undertake those activities. Overall, there is a greater operational freedom that you have in an LLP. You also have that same freedom in a private limited company, but a private limited company is far more cumbersome to maintain. So unless you're talking of a large scale, a bigger scale, and something where you want to say you create a bigger hospital, 100-bed hospital, or planning to expand more, then it makes sense to have a private limited company. So the choice will depend on, again, the circumstances or the future growth that you want to establish over there. Of course, there are ways to kind of move from one to the other, but that's for another day. And with this, I would love to kind of wrap up, and I hope you have had that takeaway that I was talking about.
Thank you so much, Geeta ji. I've been working with doctors for the last decade or so. So a lot of times the hospital owners have raised these concerns that they're facing a lot of competition from the larger hospitals, and nursing homes as such is dying. And what I understood that finance was one of the biggest aspects where, whether you are a cost leader or whether you are a specialist, how do you price and basically how do you bring your cost down, and how do you actually determine, like you rightly said, the price of an occupied or a non-occupied. So these were the questions which were coming in all our discussions, and so we thought that it's really needed to get a session on business finance for the medical entrepreneurs. I will now invite Dr. Sushmita Bhatnagar for the next part of your presentation.
Hello. This has been a wonderful session, Geeta madam. This is like a great insight. What I feel is, in my opinion, there are two types of financial attitudes. One is those who do not want to understand anything, do not want to study, do not want to apply the scientific principles related to finance in their personal as well as their business lives, and rely on others' opinions. And they take their opinions and then run their financial lives accordingly. And the second category is one who has gone into the depths of this science, and they have changed their lives for their own benefits as well as the benefits of the finance. Now, to shift from this first category, that is level 1, to level 2, there are two things required. One is to be a good student, and second is to have a great teacher. So who else better than sorry, we used to saying doctors, who else better than CA Geeta Tolia madam, who is an internationally acclaimed expert, whom we have taken us in our AMC and the Finovate partnership. And here today, we have been very privileged and honored to launch the masterclass, which is unique, unprecedented, and extremely valuable. All the business companies, all medical practitioners, and to understand this, there will be 4 sessions on Saturday, Sunday. We had to do, earlier we planned all Sundays, but then we had to plan it for Saturdays and Sundays because of the upcoming festival season starting from Ganesh Chaturthi on the 10th of September. So we thought we should finish off the masterclass before that. So Saturday afternoons and Sunday mornings. So the details of this masterclass, may I hand over to CA Geeta Tolia to probably provide more details on the masterclass. Thank you.
Thank you, Dr. Sushmita, very kindly to kind of announce the masterclasses. I will just take you through a brief of what will be encompassed through each of these sessions. I mean, while we understood the principles and the framework of thinking today, but it is also very helpful, especially for the first level people that Dr. Bhatnagar talked about, right? To kind of to transform, to take charge, to take control of their business finances effectively and start to make that, bring about that change and improve their profitability. If we can just move to the next slide, please. So in session 1, where we have, we understand our costs.
Ma'am, you will have to share your screen. Yeah, I think it's working now.
Yeah. So in this session, the focus will be completely to get an in-depth understanding of different kinds of costs, the manner in which these costs should be categorized, and when should you consider a certain cost as a fixed cost and when should it be considered as a variable cost. As I mentioned earlier, there's nothing cast in stone. It's not fixed, because today what is a fixed cost may become a variable cost tomorrow. What is a variable cost may in certain circumstances become a fixed cost. So how do you identify those, right? What is the relationship and the behavior of different types of costs and how they impact your cash flows and your profits? We will go through frameworks of the types of costs. I mean, there is just an illustrative table on this slide that you can see over here. What are relevant costs in making decisions? How do you determine your cost of occupied and your unoccupied facility? And what is the cost per unit determination? Because the cost per unit will define and determine what is the optimal size of the practice that you should have, which we will cover in a subsequent session. This session will be done over a 1.5 hour period. All sessions are going to be done over an 1.5 to 2 hours period that we will be covering that. The second session is going to focus on pricing and and the second part of it would be doing a cost benefit analysis, understanding what you are selling. How will you price what you're selling, right? The costs that need to be considered in making pricing decisions. Again, the relationship of fixed and variable costs in making these decisions. Some pricing principles have been shown out here, but we will go into a lot more depth. I mean, what is shown out here is just a sample of what we will be covering. Then making cost benefit decisions, identifying the value of all benefits, value of all costs, and the interplay if there is a dynamic change that you're looking at. What if the benefit was to go up by a certain percentage and the cost was to increase by a certain percentage or reduce by a certain percentage? What is the overall impact on the benefit that you will have? And so these are ways in which we will address being able to take appropriate cost benefit decisions. This too will be covered over an 1.5 hour duration. All these sessions, mind you, will have adequate pre-reading and post session assignments, simple ones, which you can apply to your own situation and come back with answers which will help you take you into the next phase of your journey. The third session is really a very insightful session on break-even analysis. This is something all of us are always interested in knowing. What is the optimal size of my practice? If I have a nursing home which is 20 beds, is that appropriate, or should it be a 40-bed nursing home? Why am I always making losses? Why am I not able to make profits? The break-even analysis gives you that answer. Where in your practice do you break even? And in order to determine your break-even, you will get detailed insights about the cost interplay, the unit costing of your practice, the price at which you must, the price that you must charge your customers in order to break even. Otherwise, the perpetuity over which, or the period of time over which you will continue to make losses. And this gives you that sharp answer. Great, I know my clinic or my nursing home must have a minimum of 35 beds that's when I start making profit. So if I'm at 20 beds, how do I make sure that I add another 15 beds so that I know I will start making profits? What is involved in that process? And the last session is on the legal structures. We got a glimpse over here today about the different formats and the base criteria, or the fundamental principles of choice, right? But in this session, we will cover in more detail about all the legal formats. I mean, specifically these 4, which are the profit, any business carried out for profit models, understanding through different lenses the efficacy of one type of legal format over another, from a taxation perspective, from a break-even perspective, from a freedom to operate perspective, economies of scale. So from different lenses, what is it that fits your bill perfectly is what we will look at. How do you convert from one legal format to another? Just an understanding, a framework of that, so that it is possible. It's not that if you started as a certain legal format, you're stuck with it for life. You can't change to another. Possibilities and options of consolidating and restructuring from one legal format with another. So this is what is the journey that we will take you through these 4 sessions in this masterclass. As Dr. Bhatnagar said, because of the paucity of time and festivals coming up, we have scheduled it for Saturdays and Sunday, starting very soon.